The U.S. economy in 2026 is sending mixed signals. On one hand, inflation is still a concern. The Federal Reserve's preferred inflation measure shows prices rising around 2.8% yearly, meaning the cost of living is still increasing for many Americans. At the same time, economic growth is slowing down. Recent data shows U.S. GDP growth in late 2025 dropped to about 0.7%, much lower than expected. The job market also looks uncertain. Job openings recently rose to nearly 7 million, but hiring remains weak and layoffs are still happening in several sectors. Because inflation hasn't fully cooled, economists believe the Federal Reserve may delay interest rate cuts until later in 2026. Meanwhile, many Americans say everyday expenses, food, housing, and utilities are becoming harder to afford. So the big picture is this. The U.S. economy is not collapsing, but it's clearly entering a slow and uncertain phase where growth is weaker, prices remain high, and policymakers are trying to balance inflation and jobs.